Despite what some people think, the housing market is neither moribund nor is it dead. The pace has certainly quieted down, but it's by no means on life support, despite the really dramatic rise in mortgage borrowing costs over the past 18 months or so. As reported by the Toronto Real Estate Board, home sales continued to be above last year's levels in July, which would suggest that many households have adjusted to the higher mortgage borrowing costs. However, in a broader perspective, it definitely looks like the momentum has subsided compared to where it was in the earlier spring. This is a result of the Bank of Canada continuing its interest rate tightening cycle, which it had paused earlier. Additionally, compounding the effect of higher interest rates has been an ongoing lack of listings for people to purchase compared to previous years. Since the last interest rate increase in July, however, the number of listings has moved higher, while the pace of home sales has slowed. On a year-over-year basis on the Toronto Regional Real Estate Board, while the number of sales in July was up 7.8% from July of 2022, the actual number of active listings rose by 11.6%. And the average selling price was up by 4.2% to $1.1 million and change from July of 2022. Most economists seem to believe the price gains will continue, although at a slower pace since the Bank of Canada resumed its rate hiking cycle. Single-family price growth will likely moderate, they believe, over the coming months. The higher mortgage costs might cool the home buyer pool and could also force current owners to sell as they buckle under the weight of significantly higher mortgage payments once they start to renew. This could push the sales to new listings ratio closer to a buyer's market as the months of inventory moves from a seller's market to a balanced market and beyond into a buyer's market territory. One, however, needs to bear in mind that the lack of housing supply, an issue dominating the news channels right now, has forced prices higher in both the home ownership and the rental markets. Combined with historic Canadian population growth, with us hitting 40 million inhabitants this year, plus record levels of immigration, will continue to push prices higher over time. The fall market is just ahead of us, and people will soon return from summer break, and they'll need to decide when to list, when to buy, and undoubtedly will have lots of questions about the timing of a move or a purchase, and of course the process. Most believe that the fall market will be quite active, but that enthusiasm will surely be tempered should the Bank of Canada raise interest rates once again at their September meeting. If you have any questions about the housing market, what your home could be worth, what we think is going to happen, or where prices have come from, please call me or text me at 905-717-8023. It's Chris Ablett, and I hope you have a wonderful weekend ahead. Bye for now.